we are facing the news release in 20 minutes, and the market is already reacting, so the movement is a short-lived movement. Now, what we sometimes are observing with a news release is the following. Let me explain a small tips here, which can be very useful for you. We never know in advance if the news release will be released with a big surprise. Okay, we never know that in advance. We can sometimes, for some types of news, have an idea, but this requires a lot of deeper economic studies. But what we observe is sometimes before the news release, in the last minute before the news release, during the 5 to 10 last minute, we can see a lot of speculation. So we can see speculative movement generally in both directions. Okay? Then we have the news release. And in the case of a big surprise, we will have a big spike, generally in the direction of the news. For example, it is the news on the US dollar. If we have a good news, a big positive surprise, we will see a fast down spike here, because the US dollar is the quoted currency in the euro US dollar. But a very fast movement. And then this is the first step in the case of a big surprise. A pre-step is all the speculative activity in the last 5 to 10 minutes. Then usually there is a retracement, a rather fast retracement, and the retracement can be sometimes deep enough to erase the entire spike after the news release. And then again, when we are in a big surprise context, the fundamental movement. And so this is the fundamental movement we can catch. We never try to catch the speculative one before the news release or the spike. Sometimes we can trade with the max ETF the retracement, but then we can certainly, and 1 out of 2 times we are able to trade the fundamental movement, but as I have said, only when we have a big surprise. Okay, when we don't have a big surprise, once the news is released, we will wait for a normal setup. Okay, so these are the steps you can observe. So sometimes, not always, a very speculative activity before the news release, then a big spike in the direction of the news, so upward in the case of a bad release on the US dollar, or downward in the case of a good news, then a retracement, and then the fundamental movement always in the direction of the news. With the indicators developed asked by Bernard, you can use the CRB indicator on as many charts as you want, as many MetaTrader platform, as many PC you want. The CRB indicator is not limited to, is not licensed to one PC. Okay, Michael, have a great day. So Enrico asked, oh, welcome Enrico. I remember your name. I recognize your name. So how many minutes do you wait to trade after important news like this? Oh, it depends. Minimum is 5 minutes. Okay, minimum 5 minutes. And there is a more general rule we have. We have to consider 2 main situations. Either we have no surprise or we have a surprise. When we have no surprise, we have no impact in the market. And so in such a case, we don't have to wait. As soon as we see a valid setup, we can trade that setup. Now, if we have a big surprise, we will see that 3-step movement I have explained. And the retracement and then the start of the fundamental movement can take sometimes 5 minutes, 10 minutes, 15 minutes, and sometimes even more. In general, between 5 and half an hour, in general. The trick is try to recognize once the volatility has settled down and you begin to see a more regular type of movement. When you see a movement with wicks on both sides, this means that there is still too much volatility in the movement. Or if you see too longish bar, this means that you have too much volatility in the movement. So wait for the volatility to settle down and to see more regular movement. The extreme situations I have lived myself, it was somewhere in 2008, I think, or 2009, 2008. It was with the non-farm payroll, a big surprise, but it was a difficult situation, and the market has waited 4 hours before stabilizing. And after that, we were almost at the end of the day. We have begun to see a nice movement, a nice fundamental movement. The maximum I have seen personally was 4 hours. 6 hours, yeah, why not? I'm not surprised with such large time period because it depends on the situation and it depends how the big boys will reposition. They need to analyze the situation, to redefine their scenarios probably, and then to take position. And it can take times because there are a lot of relationship, not only between the news release, but between the currencies and between other markets. All the markets are interrelated. And so sometimes repositioning correctly, or what seems to be a correct repositioning, may be a difficult process. Okay? So there is no fixed rule, but usually between 5 and 30 minutes is enough. And you will see that on the chart. As soon as you begin to see more normal candles, then you can say, okay, now the volatility has settled down. What's the best indicator you use? Asked Connie. This is a question I like because, in fact, there is no best indicator. The best indicator is the price itself. A very important point to understand with the MAX, even if we use several indicators in our template, we don't trade the indicators. The indicators are there simply to give us very quickly a situation which may be either a potential opportunity to open a trade or a potential situation for an exit. But I say potential because what will happen, let's consider an exit, for example. If an indicator like the STO RSI here gives us an exit signal, this is not a guarantee that the exit will be made. It depends what the price will do. And so the price action is always, as always, the priority. As we say, we have an expression for that, PAR, price action rules. They are simply tools making our life a little easier to go faster to catch the situation. We never, ever consider an indicator is predictive. Never. And the fact, the argument that they are lagging for us is irrelevant. You can see here we have our exponential moving averages. They are very common one. Their settings are close to the standard settings. 21 for our MO line is a very common setting, 20, 21. The long-term so by nature, by definition, a moving average is lagging. And we add a further lag. Because for us, the lag is irrelevant. This is not a true argument. Because we don't base our buy and sell decision on the fact that these moving averages are crossing. No, what we are interested in is what is the relationship between the behavior of the price action and the behavior of these moving averages. What are the informations these moving averages are giving to us in terms of quality of the movement we consider to trade? For example, averages, then we may have an interesting situation to analyze. And so it's a little more complex than simply telling technical indicators are useless because they are lagging. It's true they are lagging. It's true they represent the present and the past action of the price, but this is not what we are exploiting. Okay, this is not what we are exploiting. We are exploiting something else. Okay, see you, Oscar. Have a great day. So we are now at 12 minutes from 11 minutes and a half from the news release, so we still have to wait with patience. You can see, for example, in this case, in the euro-yen, in the pound-yen, should the corresponding trade be taken, despite the fact that I have explained that the type of breakout was not appropriate, the trade would have been short-lived. So the effort used to trade such kind of situation would have been too important in relationship with the profit we could have extracted from that movement. And this is what we are looking for. We want to trade what we call true trend. And we have a true trend. What is a true trend? A true trend is a movement of 50, 60 or more pips, starting usually around, I say around the London Open or the US Open. And when I say around, this means that we have also to take into consideration some news release. Okay, for example, this news release we are waiting in around 10 minutes is still in the context of the US Open, because we are only at 1 hour and a half from the US Open. Okay, and so we want to catch these movement 50, 60, 70 pips or more starting around the London or the US Open. When we catch such kind of movement, first of all, the question is how many such movement can we have every week? And we have a very detailed statistics about that. On average, per pair, we have 2 to 3 such true trend per week. 2 to 3 such movement per week. And when we have a movement of minimum 50 pips, if we catch that movement at its beginning, of course, we can make 1 to 2 and perhaps sometimes 3 scale-ins. And you know that when you make a scale-in in a trend, these scale-ins will increase the profit you extract from the trend. And this is why we are looking for this movement. And so personally, I run only for this movement. And the 2 or 3 other days when I don't get such true trend in my pairs I'm monitoring, for example, let's come back to the pound Kiwi here. Okay, remember, I have marked in real time 2 trades. The first trade, okay, I accept your remark, was just before we have opened the room. But I have applied them following exactly the rules I have illustrated on the next trade. And you can see 2 small trades, one with a little less than 1 R and the second one with a very small reward to risk ratio, break even. I don't care if I catch this kind of trade. I may have some small profit, some break-even trade, or some small losses, because I want to be in these 2 or 3 nice movements which will happen on average per pair and per week. Because when I catch such a movement, it is not a half hour or 1 hour profit I will catch from that movement, but it will be 3, 4, 5, 6 hours I will catch. Okay, and this is why I need to be extremely picky in my trades. I prefer to skip many trades when all the conditions are not perfect, but when I pick one, it must be almost an ideal one. They are not always all ideal. There are always small details, but we have also some flexibility. I don't say subjectivity, okay? So subjectivity for me is something else. But I want to be sure if such a true trend develops around a market opened, I want to be in it, okay? And once I am in it, I want to milk it at best. Of course, such a true trend can end prematurely. For example, when we have, as today in all that time period, a high volatility, for example here, this is a reason to close a trade, should we be in that trade at that moment. And sometimes this happens too. But in such a case, if we are still in the context of a true trend, we will be able to open 2, 3, 4 trades during the day. Smaller trades, but still several trades, okay? And this is why being very picky and so having patience and being extremely disciplined is so important. So trading is not a hobby. If you consider trading as a hobby, you will lose money. Trading is a real business. When you work for a company, you have to follow some rules. And if you don't follow the rules of the company, except if you are the boss, but even when you are the boss, you have to follow your own rules you have defined for the company. If you don't follow the rules, you put the business in danger. And if you put the business in danger, your company can disappear. So you have to apply rules in your business. It's similar in trading. Trading is a complex activity. It's a difficult activity. So you need to be extremely disciplined in trading. Okay? Okay, have a great day, Hans. Thanks for having been here for around 2 hours. We really appreciate the time you have invested here with us. And see you perhaps next Thursday in 2 days for the London Open, which may be a very interesting day too, because the previous day, so tomorrow evening, we will have the decision by the Fed, so the next day may be an interesting day for some movement. So 5 minutes before the news. Do you think, asked Wolfgang, the entries in higher time frames are less complicated? Yes and no. When I say no, the entries in the higher time frame are not less complicated because they are exactly the same. Okay, we apply the rules exactly the same way in any time frames. And yes, they are less, or they seem less complicated because we have more times to analyze the situation. When you are in a 5-minute time frame, sometimes you need to be very fast to take your decision. You don't have a lot of time to make your, to analyze a situation. And as soon as you have an entry setup bar, you need to go fast to make your entry. In a higher time frame, you have a little more time. It's much more comfortable to make your analysis, okay, because you have more flexibility to make your entry. If, for example, in the 5-minute time frame, we use, let's say, a risk tolerance entry of 1-2 pips, okay, once we have our setup bar, within 1, 2 to 3 pips, we have our entry. 1 to 3 pips is maybe a fast movement, so you need a lot of concentration and attention, and have your finger on the button to open the trade. In a higher time frame, even the 15-minute time frame, which is still a small time frame, but the 15-minute time frame, you still have plenty of time to make your decision. You can calculate exactly where to make your entry because your tolerance will be a little larger, of course, and so on. And with the daily time frame, sometimes I have more than 1 hour before making my entry after the open of the new day. Because of course I always wait for the setup bar to close before taking a decision. So yes, the daily time frame for me is very, very comfortable. And in that context, yes, less complicated. But the process is exactly the same. The rules are exactly the same. The techniques are exactly the same. Okay? What we observe, just to be a little more complete with that questions of the higher time frames, what we observe with the max is the winning rates have a tendency to increase with the time frames. So with higher time frames, we have our winning rates increasing. And this can be explained by the fact that when we use higher time frame, mainly starting with the 4-hour time frame, so the 4-hour time frame, the daily, the weekly, and the monthly. I don't know traders, max trader, using the monthly time frame. But I know traders using the 8-hour time frame or 12 hours time frame. When we use such higher time frames, the movement, the trend are driven by fundamental factors. What are fundamental factors? It's clear that the interest rates are fundamental factors, and even the most important one. When there is a change in an interest rate, for example, in the US dollar or in the euro, or the US dollar pair and or the euro pair will move sometimes several days, several weeks, several months, because the interest rates is a very important fundamental driving factor. And so with the higher time frame, the movement we see are fundamental movement. And so because they are fundamental movement and the fundamental factors do not change every day, so there is a lot of inertia in these driving factors. This is for me an explanation why the winning rate increase in the higher time frames. So we are approaching the news release in 30 seconds. So let's have a quick look. You can see that there is not a lot of activity in the market around that news release, so not a lot of speculations. This most probably is because the market is not expecting, most probably, a surprise in the market. The price begins to move only now, so let's have a quick look to the calendar as soon as we will have the data. 97.6, so a negative number, less than the forecast, so this should be bad for the US dollar. So we should see the US dollar weakening. This means that, you see, that down movement in the pound US dollar most probably is short-lived. Similarly, in the euro USD, so the price will most probably reverse, but not necessarily a big reversal because the deviation is not a very big deviation. The difference between 97.6 and 102.5 is not a very big deviation, but so some impact, okay? So what's your trade and idea when the candle is color opposite respect the news? That is to say, news good for the currency and movement to the other side. Or what I do, and we go anyway, I always wait for some minutes. So for example, minimum 5 minutes. So now I will have to wait. I don't care for the first movement because the first movement may be a movement in the direction of the news, then a retracement, and then the fundamental movement. But sometimes it may happen that we have, for example, here a bad US dollar news and the price goes in favor of the US dollar. This gets my attention and I wait still minimum 5 minutes to see what the price will do. We have had a nice example with the last non-farm payroll. the last non-farm payroll at the beginning of October was a very negative number for the US dollar. And so I will consider an example like the euro-US dollar. We have seen indeed for some bars the price going upward, for some bars, and then the price has reversed sharply and moved in the opposite direction with a very ample movement. And so as if the market, the specialists, the big boys have changed their mind and they have not interpreted that news as bad as it was, in fact. And this is the difficulty, in fact, of trading the news. This is always a question of interpretation. And because the big boys, as you know, there are perhaps 10 to 15 important banks around the world which control the Forex, which control more than 80% of all the trades on the Forex. And among these trades, you will have speculative trades, of course, you will have commercial trades, you will have a hedge trade or arbitrage and so on. Among these, let's say 15 banks, not necessarily all the banks have the same vision. And once a consensus is achieved, then you will see the fundamental movement, which is the residual, which is the result. How can I say that? You will always have a group having an upward vision and another group having a downward vision. This may happen, but at some moment one will take the control over the other. And this is when we will see the fundamental movement. And for that we need to see sometimes, to wait sometimes, until some, I don't like to use the equilibrium to appear because equilibrium has another connotation, but to see the resultant position of the traders and who takes the control. And once a group takes the control, the other sooner or later will follow. Okay, and this is what we have seen for the last non-farm payroll. At some point, it is as if the market has completely changed its mind and they have strengthened the dollar, in fact. And so I have no other explanation of what has happened. I have searched a lot, but I have not found another reason why they have changed their mind. So let's wait now still 1 or 2 minutes and let's see if we can get something else. Otherwise, we will wrap up this session. Now, when the European market is relatively quiet, you can expect some movement during the US session. So we are progressively approaching the close of the European markets. You can expect some activity during the US market. Why is it appropriate to have two accounts for longer and shorter time? In order to not mix the trade, Wolfgang, when you look at your terminal, if you don't use the comment area, you can have some confusion between the trades. And don't forget one important thing. You can be long, for example, on short, on small time frames and short on long time frames. So you can be in opposite directions depending on the time frame. And you cannot, with many brokers, and in USA, for example, even if, except if you have the broker using some specific mechanism, you cannot hedge your trade. You cannot take a long and a short simultaneously. If you do that, the two trades will clear. And so you will have the resulting trade. For example, if you are two lots long and one lot short, you will result with one lot long. And this is not what you necessarily want by trading two different time frames. And this is why I never mix two time frames with the same account. Okay? Even if my broker here in Europe, because I am in Europe, even if my broker accepts trades in opposite direction. So not all the broker accept hedging, but the way I trade is not hedging. I don't use one time frame to hedge trades in the other time frame. I simply want to trade movement in these time frames. But technically it may seem as a hedge if the two trades are in opposite direction. You can see here that the news has been negative for the US dollar, and it seems that the US dollar wants to strengthen. This sometimes happens. This means that the big boys perhaps are estimating that that bad number is not as bad as it seems to be. Another reason may be, we have to pay attention to that, another reason may be they want to go long on the euro US dollar or the pound US dollar. So they want to short the US dollar, but they need to find a more appropriate level to go long. So they may be sometimes forced to push the price in the opposite direction until they find the necessary liquidities level to go long. Because don't forget, if they want to buy, they need to find sellers. Otherwise, the price will not move in their direction. And so this sometimes is what some traders call market manipulation. But I don't call that market manipulation, I call that price discoveries. Price discovery is simply a process by which the market is looking where the liquidity levels are located. They don't know in advance. If you put an order in the market, they don't necessarily know that you have set an order in the market. And they will not necessarily try to go against your order, but they want to find pockets of liquidities to fulfill their own objective. And this can be sometimes recognized when the price is moving very fast. When you have long bars, like the bar we are seeing in the pound US dollar, in the pound yen, and the price is moving fast, this is sometimes, not always, sometimes an indication of a market manipulation. And so this means that if you have at some moment the opportunity to jump into such a trend, such a movement, will not call that a trend, but in such a movement, pay attention, the movement can reverse very quickly. So here, for example, in the pound yen, the setup technically here was perfect for re-entry. We call that setup a re-entry. Let me check which candle. Yes, this setup was a perfect setup for a re-entry, but we were facing the news. The news was coming on the next candle, so out of question to take that movement. Okay? This would have been gambling. Afterwards, it's always easy to define the ideal trades, even through the news. When we know the future, when the future becomes the past, it's always easy to make predictions. Predictions on the past are easy to do, but predictions on the future, oh, that's way more difficult. Now, to know if this may be a market manipulation for the big boys trying to find pockets of liquidities to buy because they want to go long, possibly, if this is their intentions, what you can do is you can use higher time frames and see if you have some significant levels like support or resistance levels. This may be very useful to have an idea where the price can possibly go. Let's do the exercise here with the pound yen. Let's see if we have some higher levels, higher time frame levels. I will take, for example, the daily time frame. On the daily timer, let me clear these notes here. Okay, I see the price. So the price is at the moment here. And we can see that we have here we have some level here in that area where the price has bounced off from these levels. We have also a level lower, but I don't believe the price will go to these levels, and another one here in that area, and then in that area. And we can check even further in the past to have more significant tops, for example here. So this seems to be a good one. But the price is too far away, 180 pips, sorry, 300 pips below. So this is not a potential level for today. This one is also too far away. So this seems to be the area where the price can bounce off. You see here, it was a resistance, then a support, a resistance, a support, a support, a resistance, a resistance, a support. So it may, and you can do that exercise by switching to some other smaller time frame, like the 4-hour time frame, and you can check for, you can fine tune with the smaller time frame. For example, here we can fine tune most probably in this area, there, that way. It is a zone, in fact. You can draw a zone that way with a small rectangle, and you can adjust the upper level of your rectangle with as many contacts as possible, and then the lower level. And don't be afraid to use a large box, size box, even this way here. You have a lot of bodies or wicks touching that lower edge of the box, and then you can do that for several higher times, and then you switch back to your traded time frame, and you may have an idea, nothing sure of course, but you may have an idea where the price can go before reversing and start the fundamental movement. Okay. Hi Jean-François, nice to see you. Oh, I don't use fib numbers, Jean-François. I don't use fib numbers. Now, if it works for you, that's nice. If you have found a way to use them, that's good. That's good. You know, sometimes it's good. I'm not happy with sometimes. I will be happy if it works most of the time. I don't use the word always. Always never exists, of course, in financial market, but it must work most of the time. And between 100%, 162%, 262%, we have too many choices. I prefer to consider a zone in the proximity of where the price is now to have a good idea, okay? And I don't have the rigidity of the fib levels to define a potential end of the movement and then a retracement or a reversal. But that's just my personal opinion, okay? I know that there are some pros of the fib levels or fib extensions, and if I ask to people to not criticize the way I use indicators, I will respect them too. If they work for them, that's good, and they are right to use them. So Mohammed asks, I have a question. I have seen videos where traders with years of experience do one plus lot. Is that acceptable if it's in the long time frame, bearing in mind risk and portfolio size? Yes, Mohammed. You know, it's a trading style. Many traders consider trading as the fact that a trade is opened. We can call that a position or not. So the trade is opened and then the trade is closed, whatever the number of lots or the number of contracts they are using for the trade. And a very common approach is they open a trade with several lots and then they progressively close some lots at some points based on some criteria until the entire trade is closed. Okay, that's another way to handle a movement. The fact that we add to our trade, we use scaling techniques, and a combination of scaling and scale out technique is another way to exploit a movement. There is no absolute way, but what is important, whatever the style you are using, is you need to have a trading process which is clearly identified, which is clearly defined. You need to know exactly where your entry points are, where your exit points are. the appropriate conditions to apply them. This is your trading plan, in fact, and then to stick to your process. Okay. The only difference which will you will observe between two different trading styles is the difference in the result, and that's all. And even with that, I would say what is important is not the result we are able to take from a movement, but the consistency you will have in the way to handle your movement. Because even with a small profit on average per day, you can still nicely grow your account. So the consistency is the criteria which makes the difference, in fact. All the other aspects are simply a question of styles. And to scale in and scale out along a trend, you need to understand the trade risk management in great details. You need to understand the consequences of a bad decision, and so to put your focus on the perfect execution of the process. And this way you will feel comfortable in using that style of trading when we add to our trade, keeping the risk at an acceptable level, because this is key, how to keep the risk at an acceptable level. Because what will happen when you will face an unfavorable period with more losing trades than winning trades, with more losses than profit, you will be in a drawdown. Your account will face a drawdown. How do you control the drawdown? How to keep the drawdown as small as possible before restarting a favorable period, during which you can recover and you can grow your account again. And this is key. It is a survival game. And that game, that survival game, the key point is to achieve that consistency in order to always keep the risk under control. Okay? And so for me, the entry here was not appropriate. For me, the entry was too risky because of the news release. And so I don't mind to miss what seems to be a good trade. And by the way, there are two reasons to consider I have missed a good opportunity, but again, I don't care for that. If you look here, that support level of the previous consolidation zone mode, or even if you draw it a little lower through that pivot or that bottom, what do we see? We see a common behavior. The price breaks the support level, makes the breakout, and then comes back, revisit what has become now a resistance level, and then bounce off and develop a movement. Is that movement a good movement? Is something else? It will depend on the global context. But this is a typical behavior, and in the MAX we try also to exploit these kinds of movement to define a good breakout, of a consolidation zone mode. But again, in this case, we were facing the news release at the open of the next candle. This is why this was not for us a good entry level. Okay? And we will see if the price will bounce off in that area. Remember, we have defined all that zone area as a potential bounce off to the upside. If, again, I repeat, if my assumption for the big boys is correct to go long. Now, if they consider the sentiment is bad, the sentiment, the consumer sentiment has given a bad number, if they consider that news as important, normally we should see the US dollar weakening. Okay? Okay, Alan, have a great sleep, a good rest. Thanks for having been you in this room. You're welcome, Mohammed. Let's wait a few more minutes and then just to see if the price will bounce off here, and then after that we will wrap up this session today. And so we will see next Thursday, so this time for the London Open. Okay. Don't forget that in Europe we went DST off last weekend, so and USA will go DST off next weekend. So during this week there will be only 1 hour less in the gap between New York Open and London Open. So instead of having 5 hours difference between the London Open and the US time zone, we have only 4 hours. Okay? Don't forget that. So there is a difference of only 4 hours between the London time and the US time, the New York time. And next week we will come back to the 5 hours difference. All these down movements were not appropriate movement to take an entry with the max. The pullbacks were not important enough to consider an entry. All the entry setups I see were not valid setups. And we can see another tip I can give is the following. As long as after the news release, which was here, we still see some wicks on some pairs on both sides of the candle, or some large wicks, this means that there is still some indecision in the market. The big boys are still testing the market, in fact, to decide which way to go. The prime course to start to know your trading system. It's difficult to. Dear, unfortunately, I have to go. Thank you very much. Okay, thank you, Enrico. See you for the Max Primer. Have a great day. Aha! It seems that the pound US dollar, the pound yen wants to bounce off here. This is the case, as we can see, in the pound Aussie, the pound Kiwi, the euro Kiwi, the euro Aussie, and so the main pairs will most probably follow too. But as I say, as I am used to say, I never try to predict what may happen. I simply observe what I see on the chart, and once I see an entry setup, a coherent one with all the conditions being fulfilled, then I trade it. And so should, for example, the price still go downwards in the pound yen, this is still a possibility, I will need to have some more important pullback in order either to have a remo or to have a re-entry. Okay, and we have strict conditions for that. So today I have taken some more time because we had that opportunity to explain some of the concepts we have with the MAX. So we can count perhaps on some better or better defined movement for the London Open next Thursday after the Fed decision. And so don't be surprised Thursday to not have too many explanations from me. I will mainly describe the trade as I will see them with the max rules. Okay? So are there some questions before I wrap up here? Oh, thank you, Suzanne. I appreciate. Do you have some last questions before I wrap up the session here? And I will ask Craig or Chris if they have some last comments to make before we wrap up. Okay, thanks, Craig. Oh, a lot of thank you. It's my pleasure. And I see some Max graduates here in the room. That's always a pleasure to see them. So Jean-François, Ole, Nor, and I apologize if I have forgotten some of you. The list is too long to go through all of them. There is no extra charge for the software. William, MetaTrader is a free platform. We provide for free the indicators and the template. There are some specific 2 or 3 custom indicators which are additional. They are not, oh, Stefano, nice to see you. There are some custom indicators which are not free. It's not an obligation to buy them because they are simply indicators synthesizing some of the max concept. They make our life easier. Let me show you a small example. I'm going to take a chart here. Just give me a small moment. We have here, let me show you an example of the pound yen here. Okay? You see it, this chart? A custom indicator is this one here, which is called MTA, the Max Trend Analyzer. It's an indicator which implements some of the concept of the max. A very important concept is, for example, the concept of angle separation and correct order of the 3 EMAs, the red, the blue, and the gold one, plus other conditions. And so these conditions are coded. When you know these conditions, you don't need that indicator, but that indicator codes these conditions. And so it's very easy at a glance to see when a setup is technically valid. For example, here, let me check very quickly something. Yeah, here we had an entry set up to go short. Perhaps, let me check again. Yes, we had an entry set up, but we were facing the news release. So technically, this was a valid entry setup. And here, this horizontal line shows the bias of the trend, so a down bias. And the 3 colors is showing the quality of the momentum. The blue color shows that we have no momentum. The orange color indicates that the momentum begins to appear. And when we have the green color, we have a momentum which is high enough. And so, for example, should this movement be tradable, this entry here, most probably, if all the other conditions are fulfilled, you see, nice full momentum would have been a scaling entry. Okay? So an entry here, should the trade be valid, of course, but the global contact was not valid, and most probably a scaling here. Yeah, it would have been a technical valid scaling. Okay? So this is the kind of, and this is the kind of custom indicators. We have 2 or 3 such custom indicators which are not free. And I will show next time the ETF concept we have with the MAX. just for an illustration, and the dashboard we have, because the dashboard is really very useful. Okay? But once all the concepts are understood, these additional custom indicators are not an obligation. They simply make our life easier. Now, in this session, all the indicators you see here are free, and they are provided for free. Even if we have some, for example, you see Bollinger Band, these yellow and green bands are Bollinger Band. They have been tweaked for our needs, but they are provided for free. Okay? Okay, again, and you see here, by the way, that the price on the pound yen seems to bounce off exactly in the zone I have indicated, and I have not been very accurate in the way to draw that area. But this seems to be the case, and so this means most probably, because of the news release, the big boys are looking to go long or short with the Euro USD, short the Euro USD. Okay? Well, I thank you very much for your active participation today and all your questions. Zvemir, I'm sorry, has asked a question I have not seen. Is there any entry on the 15-minute time frame? I don't know. In which pair? Let's go quickly in one pair. Give me just one pair, Zvemir, and I will tell you if we see something. Which pair do you want to see? Let's take a few seconds for that. Euro US dollar. Okay. Euro US dollar. Let's switch to the 15-minute time frame. 15-minute time frame, and if I enlarge the chart, we don't have an entry for the moment, because I can see at a glance that we have only our three EMAs beginning to align correctly, but we need still to wait for a valid entry setup. Okay? And the bias will be to the downside until the price reverses and give us a long setup. Okay? Okay, so again, thanks very much. I wish you a great rest of the day, a good week, and see you Thursday for the London Open. So have a great day, and in the meantime, take care. Bye everyone.